Adil, bringing you a review of the FTSE 100 from an intermarket analysis perspective, and as the soundtrack states, hills to climb. That's exactly what I should name this FTSE video. It has a hill to climb. Okay, so it has the Argentinian hill to climb, it has the Portuguese Banco hill to climb, it has the Palestinian and Israeli hill to climb, it has a Russian Ukraine hill to climb, and I think that's it in a nutshell. I think the only hill that we have climbed is the Yellen one so far, because her emphasis was on the wage price growth, and with regards to the US data coming out on Friday, weaker than expected in terms of jobs data and the average hourly earnings, then obviously that supports her argument that the QE tap or the interest rate cycle should certainly be pushed back. So therefore, the concerns of interest rates rising faster than expected have certainly been neutralized, and that should be enough to send and propel these markets higher. Okay, so it's usually the US is in a Goldilocks situation where it has strong economic data, and the rate cycle will remain low, or interest rates will remain low. That will support growth. So they're in a good situation. So with regards to Argentina, with regards to Portugal, with regards to Israel, Palestine, and Russia, Ukraine, these are all concerns that can certainly be alleviated with a ceasefire deal if it is struck over the weekend, and that bodes well for the stock markets going forward. Okay, with regards to Russian sanctions, yes, that will hurt Europe for some time to come, but even then, they may well be a solution going forward, because the Europeans can't afford to maintain those sanctions, especially with regards to weaker growth in the periphery. Okay, so let's have a look at the UK market for now. Okay, with regards to the sanctions on Russia, the UK isn't impacted as much as Germany is. Hence the reason why the German index has certainly broken lower. Okay, so let's see exactly what's happening with regards to the FTSE. Okay, so first of all, the first variable that I want to put forward is sterling. Okay, sterling has had one hell of a sell-off. Therefore, I expect this to translate to higher exports going forward. And obviously, when sterling sells off, that means that interest rate expectations certainly go lower as well. Therefore, interest rate cycle is being pushed back, or the interest rate rise cycle is certainly being pushed back, which obviously is supportive of equities and supportive of the FTSE as well going forward. So all we need to do is overcome the concerns of Argentina, Portugal, and geopolitics, and this FTSE will certainly propel higher. Okay, that's basically where we stand. So lower sterling helping the FTSE 100 to propel higher. Okay, now as we all know, I've already explained the concerns, but remember the positive variable on Friday was the fact that the wage price growth, or the average hourly earnings, etc., or the employment cost index, which came out slightly higher, had a lot of individuals concerned, which triggered a sell-off in the US markets. Has certainly been alleviated. Therefore, I expect a short squeeze come Monday. Okay, provided there's a ceasefire, provided Asian markets stay higher. Also, with regards to Chinese data on Friday, was stronger than expected. So again, that supports the commodities and supports the FTSE 100. Okay, so certainly bear that in mind. With regards to the UUP does have an inverted head and shoulders target of 2022, but with regards to the US data being so weak on a Friday, then I expect the dollar to push back, and obviously equity markets to be supported there as well. Okay, so that's basically the one of the most important variables. Okay, with regards to FTSE, and it's all about interest rates. Okay, so basically the daily chart of the FTSE 100. I just need to add in my moving averages. I'm not sure why my moving averages keep disappearing, so just give me a second whilst I do that quickly. Okie dokie. Here we go. Okay. It's 20. Bear with me. This should have been done already. Okie dokie, right, there we go. So obviously we pace through the 200 MA, I mean, there was this key trend line here, which unfortunately was eventually. I mean, this is the one that's obviously is expected to hold for now. The key one was going back. Let's just bring this back up now. Weekly. The weekly one is certainly further below. Okay, so basically the weekly chart, we're into the obviously a bearish engulfing candle, bear flag. We're into the key trend line on the weekly chart. There was another one, but let's just leave that for now. So weekly chart, obviously we're in trend line support. Daily chart, we've got a bottoming tail. We've obviously held this key trend line here. The one that was coming from the low from here, I'm not sure. Okay, no, ignore it. Okay, there was one trend line, but that's mainly the weekly one that we're going to focus on for now. Okay, so that's basically the only one for now. Okay, so that's your trend line. You can use your parallel and try and attempt to draw another one. Okay, so you've got two trend lines there. Okay, diagonal trend lines. But from my perspective, the most important thing for me is that we've got a bottoming tail. Okay, we had a bottoming tail previously. Obviously, we went lower this time. Stopped me out. Really annoying. But that's basically the market for you. And we've obviously short squeezed higher. So bottoming tail. So what does a bottoming tail mean? It means that all the sellers have exhausted now, and they've obviously covered their positions from a short side. And that why have they covered their positions? They've covered their positions because number one, sterling has dropped quite substantially, and that's obviously going to help exports going forward, and has brought rate rise expectations back down. Number one. Number two, the Yellen's concept of a slack in the labour market, and obviously the wage price spiral, the wage growth in real terms is obviously not there. So therefore, that obviously supports her view that the rate rise expectation will be pushed back. Obviously, that's dovish monetary policy, and that's positive for equities. So that's basically how we're interpreting that. Okay, folks. Right, bear with me. I've got a cricket match today. More than likely, will be rained off, but just keeping an eye out for the message, just in case it does get called off, and then I know exactly where I stand for the day. So bear with me. Okay, I understand. That's basically where we are. Here we go. Weather very much hit and miss, guys. Let's have a look here. Okay. Right, so square's wet. Okay, understood. Right, so the square's wet. Looks like the game's still on. So once I finish this video, I'll be off. Okay, so bottoming tail in. Okay, so from a daily chart perspective, that's certainly seller's exhaustion. Obviously, short squeeze expected or already occurred to a large extent post the US jobs data, which supported a dovish view, which I've already explained. It was all about the employment cost index. It's all about wage price pressures, wage price growth. Why? Because that's basically the real essence, the wage price spiral. If you study economics, which obviously I've done at a degree level, you'll understand one of the key features is cost push inflation, or demand push inflation. Okay, and one of the essence of cost push inflation is wage price spiral. Okay, so that's basically what causes real wages to increase, which increases costs of production, which then is passed on to the consumer, and that's what creates cost push inflation, okay, via the wage price spiral. And that's basically what this individual known as Yellen is attempting to obviously focus on, because she realizes that because just like Carney, they want to move the parameters and move the yardstick, even though they claim to adhere to forward guidance. It's not forward guidance, it's guidance for forward guidance, then guidance for forward guidance. So basically, you're constantly changing the yardstick until you're happy with the economy's performance, and obviously one of their biggest threats is deflation right now. Okay, so what does that mean? In essence, in layman's terms, in simple terms, it means that they're going to remain dovish. If they remain dovish, what does the stock market do? It loves to move higher because of the easy monetary policy, etc, etc, etc. Okay, so that's basically what we're looking at there from a FTSE 100 perspective. FTSE 250, which I always utilize to see exactly what you see there, bottoming tail, we've held this key pivot trend line, and obviously horizontal support. So as another argument for the FTSE 100 to move higher. Okay, FTSE 350, let's just observe that. That's something that I observe again. Abracadabra, what do you notice here? My concern is the fact that yes, we have broken this key trend line, but having said that, given the fact that we've got a bottoming tail, I'd certainly expect a bounce coming to next week. After a bounce, yes, we may well obviously move lower. That's again something hypothetically speaking, but again we'll see when we arrive. But for now, bottoming tail, double bottom, or horizontal support has held. Therefore, I expect this market to move higher. Okay, so that's basically what my emphasis is going to be on. Okay, and obviously we've held this trend line here as well. So just keep an eye on that, folks. Okay, so trend line support, diagonal trend line support, and nothing else other than that, to be honest with you. That's the only other trend line that you could possibly draw. So diagonal trend line support, bottoming tail, and what does that mean? We're going higher. Now there are other intermarket analysis reasons why we're going higher. Number one, if you study my German DAX video, and also I'll be doing a US market video as well. Hopefully I'll start doing some currency analysis as well and trying to share that with you and giving you my potential setups and insights to my setups as well. Okay, so this is basically where we are at present on the daily charts. All the daily charts are telling me that we want to go higher. Now let's go and observe our smaller time frames. Now I can give you a review on the mining, oil sector, retail sector, etc, etc, but these videos will be too lengthy and I honestly don't have the time to go into detail to such an extent. So I need to focus on my trading, focus on my own analysis. Can't make videos all day. Okay, so again, if you want further insight, then obviously join the live analysis service where I send my detailed analysis for daily trades out to subscribers. Okay, so here we go. So a double bottom obviously is held here, even though we did go lower, we have recaptured it and we are back there again. So basically what he's trying to explain to me here is that this market is on the verge of making a higher low. Okay, so we have something that we have to keep an eye out for. So that's something that I will certainly focus on now that we've held double bottom support on the 60-minute chart. Okay, so let's see if I can just draw a trend line in here. That's basically it for now. Okay, so double bottom support, nothing really else that I can see have any emphasis there. Again, on this occasion here, this is a higher low, so on the smaller time frame we've already put that in. Where do we go from here? Okay, let me just delete the rest of this because we don't need this anymore. We don't need that, we don't need that, we don't need that. Okay, so basically a target will be for next week will be to close this gap here. That's the gap that we must close. That's something that I'm going to focus on, and get everybody else focused on that too. Okay, so that's basically where we are. Okay, so this gap must close. I'm looking for a potential, I'll be a buyer next week. Obviously the 20 MA is now gone through, the 50 MA. Obviously you got some potential support here. So I'll certainly be looking to buy, and I'm looking for this gap to close, and obviously potentially hit the 200 MA and the diagonal trend line there. Okay folks, so that's basically what I'll be observing and looking for. One of the other main variables that I look at is the BP. Okay, and what formation does BP have right there? It's an inverted head and shoulders formation. So what happens if BP, given the fact that BP is almost 10% of the FTSE itself, given the fact that Royal Dutch Shell obviously earnings were pretty impressive, then we are looking to have an inverted head and shoulders formation here, and that obviously sends the FTSE 100 propelling higher. That's just one of the insights I can give. I can give you so many other arguments, but I must dash now. I need to go play cricket at Heaton Mersey Cricket Club. Still overcast, still forecast to rain for the day. Let's hope I get a game. I need to go do some throwdowns. I'm opening the batting today for the first team, so I must dash and get ready. So risk on, risk off, wax on, wax off. Goodbye now.